Before we begin, a critical reminder. I am not a licensed financial advisor, CPA, or attorney. This video provides general information on IRS regulations for educational purposes only and does not constitute tax, legal, or investment advice. This presentation is not a substitute for professional counsel. Please consult a qualified tax professional or attorney regarding your individual tax situation and the rules governing retirement accounts. Precious metals carry intrinsic risk and may not be covered under FDIC or SIPC. Introduction: the collectibles tax and the IRA exemption. The Internal Revenue Service, IRS, generally classifies physical precious metals as collectibles, meaning long-term capital gains are subject to a maximum tax rate of 28%. However, the Internal Revenue Code provides a specific exception. Certain precious metals are permitted within a self-directed IRA, SDIRA. This grants the metals the standard tax benefits of the IRA, tax-deferred or tax-free growth depending on the account type. We are going to analyze the 3 non-negotiable rules set by the IRS for using this exemption. Section 1. The Purity and Coin Standards, what you can own. The IRS is highly specific about the quality and type of metal that qualifies for inclusion in an SDIRA. Not all gold and silver qualify. Purity requirements. For bullion, the rules are strict. Gold must be at least 99.5% pure, 0.995 fine, and silver must be at least 99.9% pure, 0.999 fine. The collectibles ban. The IRS specifically prohibits collectibles. This means rare, numismatic, or graded coins valued above their metal content are generally excluded, unless specifically exempted, like certain American Eagles. The focus must be on investment-grade bullion. Example products. Common eligible products include Canadian gold maple leafs, 99.99%, and specific bars rounds from accredited refiners. Section 2. The Custody and Storage Rule, where you can store it. This is the most frequent area of violation for precious metals SDIRAs. Custodial requirement. The metal cannot be in your personal possession. It must be held by an IRS-approved custodian, a bank, trust company, or brokerage. Approved depository. The custodian then contracts with an approved third-party depository, a recognized insured vault, to physically store the metals. The home storage risk. If you take physical possession of the metals, even temporarily, the IRS considers this a taxable distribution of the IRA's assets. This can trigger a penalty if you are under 59.5, and you will owe income tax on the full market value of the metals. Section 3. The Prohibited Transactions Rule, who you can't deal with. IRS Code Section 4975 dictates that an SDIRA cannot engage in a prohibited transaction with a disqualified person. Violating this rule can lead to the disqualification of the entire IRA, resulting in severe tax penalties. Self-dealing. You cannot use IRA assets for personal gain. For instance, you cannot buy gold from your personal collection or use your IRA metals as loan collateral. Disqualified persons. This list includes you, the IRA owner, your spouse, your ancestors, your lineal descendants, children, grandchildren, and any entities you control. You cannot conduct business, sell to, buy from, or lend to any of these individuals using the IRA fund. Consequence of violation. If the IRS determines a prohibited transaction has occurred, the entire account is often deemed distributed on the first day of that tax year. Conclusion. Due diligence is key. The benefit of tax-deferred or tax-free growth for precious metals via an SDIRA requires strict adherence to IRS code. The primary risks are complex tax rules, high fees for storage administration, and the potential for fraud. The responsibility for compliance, from selecting eligible bullion to avoiding prohibited transactions, rests entirely with the IRA owner, not the custodian. We urge all viewers to seek counsel from a qualified professional before structuring or moving any retirement assets. If you have questions about the complexities of IRA contribution limits or withdrawal rules, leave them in the comments below.